Samantha, great to have you with us. What do you see for prices? Is this a short-term decline here and a longer-term trend?
Yeah, so what we're seeing is that you have this incredible energy crisis in Europe that is pressuring the euro, and now with the latest UK measures, it's also pressuring the pound. And this is impacting the dollar, and as a result, impacting oil prices negatively. Now, the only reason why this can be sustained for a while longer is that the slowdown in consumption in China with the sluggish economic activity rebound we've seen there has given some room for oil balances to not continue to tighten at the pace we were seeing previously, right? Going forward, as China reopens, even if that's from spring next year, we still don't have a solution on the supply side, right? So we're seeing rig counts start to decline in the US. We're seeing Saudi Arabia get to pretty much its target production levels. So the problem has not been resolved.
How do you think about the push-pulls going on in Europe in terms of potential shortages and potential of a cold European winter, and then what the UK is doing in terms of capping energy prices?
So Europe has done the work in building enough storage to face a winter if that winter has temperatures close to the 10-year average, right? So we're seeing storage above 90% full. This is what was needed. There is plenty of LNG coming in. So it's the best that we could have hoped for ahead of the start of the winter. Now, the biggest risk to the region is still those winter temperatures, and a colder than average winter could still create a lot of upside pressure on prices and potentially additional government intervention. The caps announced so far, it's interesting, right? Because we don't have full clarity on what the EU is going to do yet. I mean, they are talking about capping electricity revenues for non-gas providers, but it's not yet clear how the difference between that cap and the gas-driven marginal electricity price is going to be presented to the consumer. Is it going to be a direct subsidy on the price of electricity, which would incentivize consumption to continue? Or is it just, let's take that difference and write checks to low-income households, leaving the electricity price elevated, thereby leaving an incentive for people to save on their consumption, right? In the UK, it's a little bit different because they capped energy bills. And even though they did, the levels that we see for energy bills for this winter would still be about 60% higher than last winter. So at the very least, we still see incentives for people to save in their heating consumption over last winter.